Hi everyone, welcome to Study with Curly and I'm your Curly. In our previous videos, we learned the golden rules of accounting and the basics of accounting. Now the next question is, whenever a business transaction takes place, where do we record it first? Yes, the answer is journal. Journal is a book in which all the business transactions are recorded for the first time in a chronological, which is date-wise order. Okay, so journal is just a book in which all the business transactions are recorded for the first time in a date-wise order. So, what are the business transactions? In this transaction means all the activities which are occurred in the day-to-day business. Okay, so it shows which accounts are debited and credited and the amount involved in each transaction. So, in journal, we will be having two accounts. One is debited and one is credited. So in journal, we will be recording debit and credit and the amount involved in each transactions. It is also known as book of original entry because transactions are first entered in the journal before being transferred to ledger accounts. Now the question comes to your mind that what are ledger accounts? So this we will be learning in the coming videos. Okay, now we are going into journal entry. So what is journal entry? Journal entry is a process of recording a business transaction in the journal. So here we learned what is journal. So journal entry means it is the process of recording. What we have done in journal, no? That process is known as journal entry. So, journal entry is the process of recording a business transaction in the journal by applying the rules of debit and credit. So, what are the rules of debit and credit? Which we will be seeing here, and the full video of golden rules of accounting I will mention in the description, which was the first video. So, you can go through the video and you will be getting a clear idea of what is golden rules of accounting. Okay. So, in simple words, the record of transaction is made in journal is called journal entry. Whatever you record, okay, that is journal entry. Okay, double entry system. What is double entry system? It's nothing but for every debit there is a credit. Okay, we'll go into the format of journal. In journal, you will be having 5 columns. In that, date, which is mandatory, it will be in a date, month and year. Then comes to the particulars. Then comes to LF, which is ledger folio. Okay, then debit amount. You have to write in a bracket that whether it is just the amount you are writing as a full amount, or if you are writing in a thousands, you have to write as thousands or lakhs. Same. For every debit, there is a credit. So you will be writing a credit. Now here, we'll go into the explanation of all the column names. Okay. Okay. In date column, already we know. In date, the date on which the transaction occurs is recorded here. The transactions are recorded in chronological order, which is date wise, one after the other. Next comes the particular column. In this, the names of the accounts to be debited or credited are recorded. So, the account to be debited is written first, followed by debtor, and then the account to be credited will be written, preceded by the word to. Okay. For example, cash account, debtor to sales account. Okay. This is the debit and this is the credit. Then third column, what was the third column? LF column, which was ledger column. So LF stands for ledger folio. It indicates the page number of the ledger where the account has been posted. Okay. So If you are writing exam, you will be writing every page number. Okay, why you are writing the page number? To identify what comes after the other. Likewise, in ledger, we will be writing the page number, which is mentioned as ledger folio in the journal. Okay, this column is filled after posting the entries in the ledger. First comes the journal, then comes the ledger. So in this column will be kept as blank, and once the ledger account is done, we will be writing the page number in the LF folio to reconcile. Okay. So here next comes the debit column. The amount of account debited is recorded. In credit column, the credit amount is recorded. Then comes the narration column. What is narration? We all know it is a brief explanation about anything. In journal, it is a brief explanation about the transaction which we have entered. So written below the journal entry in the brackets for every transactions. Let me show you. So here we wrote the transaction, right? Here we will be writing like cash sales. Uh, okay. Here we will be writing as goods sold for cash. This is the narration. So it is the explanation about the entry which we have written. Okay, simple, clear. Okay, now comes the golden rules of accounting. So here we are discussing in short. Uh, this is the mnemonic or memory technique. Receive in pain, give out gain. I'll tell you what is receive in pain and give out gain. So in golden rules of accounting, we have three accounts type. One is personal account, second is real account, and third is nominal account. This is the rule of each account. For each account, there is a debit rule and credit rule because for every debit, there is a credit. Okay. So when it comes to personal account, debit the receiver, credit the giver. Real account, debit what comes in, credit what goes out. Nominal account, debit all expenses and losses, credit all incomes and gains. For a clear understanding of this, please refer to my previous video for a clear understanding. Okay, for simple terms, you just memorize as receive in pain, give out gain. Repeat with me. Receive in pain, give out gain. So see, this are the debit, this is the credit. Receive, receiver. In, what is expenses and losses? It gives you pain. So just for remembrance purpose, you can remember as pain. While writing, you have to write as expenses and losses. So what is the credit rule? Giver, give, out, gains, incomes and gains. Okay, just repeat with me. Personal account, debit the receiver, credit the giver. Real account, debit what comes in, credit what goes out. And nominal account, debit all expenses and losses, credit all incomes and gains. In simple term, please remember as receive and pay, give out gain. Okay, you can first fill the receive and pay column, which is debit, and then you can write as give out gain. Okay, understood? Okay. Now we are coming into the example of journal entry. Okay. Goods purchased for cash, rupees 20,000. We are coming to the example of a journal entry. Purchased goods for cash of rupees 20,000 on 10th June 2016. 26. 10th June 2026. Okay. What are the five columns we have? Date, particulars, ledger folio, that is LF, debit, credit. So in date column, we are writing 10th June 2026. Okay. In particulars column, what we have done? Purchased good for cash. So purchase account debtor to cash account. In personal account, I'll just give a simple brief. In personal account, it comes to a person, organization, bank, everything. In real account, it comes to things and assets. In nominal account, it comes to all the expenses and losses, incomes and gains, which are the day-to-day transaction of a business. Okay. Now, it's not necessary that for personal account debit, you will be having a personal account credit. No, it is not mandatory, and in most of the accounts, we don't see that. Uh, Normally, you will be seeing like for personal account, debit personal account, and you will be having a credit rule of real account. Okay, okay. In this example, you just try to figure out what is purchase and what is cash. So when you purchase a goods for cash, you will be debiting purchase and cash. What is a purchase account? Purchase account is a nominal account, which is the expense for you because the money goes out of your pocket, so it is the expense for you. Okay. Purchase account is a nominal account. Okay. This expense, we just write as expense. Then another account what comes here is a cash. We are purchasing goods for cash. What is the cash here? It is a real account because cash is an asset. Okay. Here what cash has happened here? The cash has gone out, which is goes out. Just link this with this golden rules. What is nominal account expense? This is a debit. So you will be debiting purchase. Okay. And what is cash? Real account goes out. Where do you see goes out? Credit. So we are crediting cash account. Understood? Purchase is the nominal account expense. So you are debiting it. And cash is the real account which goes out. It is a credit. So you are crediting the cash account. Okay. So in this bracket, you could see being goods purchased for cash. This is the narration. Okay. Then for how much you have purchased goods? 20,000. For every debit, there is a credit. Okay. So you are debiting 20,000 rupees and you are crediting 20,000 rupees. Now, there are some important journal entries which you need to learn. It will be the basic entries and it covers the most of your questions. What are the basic entries? Capital introduced, purchase, either it is cash purchase or credit purchase, and sales, cash and sales, cash sales and credit sales, salary, rent, wages paid, commission and interest. Normally it will be received and it will also be paid. And furniture and machinery purchase or sales, drawings, you will be withdrawn some amount from the business for your personal use. Then bank transaction, you may have debited, you may have deposited something or you may have withdrawn something. Then discount allowed and discount received, purchase return and sales return. If you have purchased something, there will also be a return. There might be a return or there might not be a return. It is not necessary that for every purchase you will be having a purchase return and for every sales you will be having a sales return. Sometimes you will be having that and sometimes you will not be return. Like if you purchase some tomatoes, it is rotten, so you will be returning it. In that case, you will be returning. Okay. Then depreciation on machineries, furniture, etc. And outstanding and prepaid expenses. Outstanding means yet to pay. and responsibility is incurred but you have not paid. Prepaid means you have already paid. Okay. Okay. Now we have seen the journal entries, basic journal entries. Here we will be seeing the entries for the above mentioned questions. What was first one? So here you can see journal entry, capital introduced. Okay. So normally there will be an heading for journal entries and the heading. Journal entries of ABC Limited. You will be given the name. So you'll be writing journal entries of ABC Limited for the 2026. Okay. They will be given you the name and the period for which the journal entry should be prepared. You have to write that. Okay. Now here comes the capital introduced. In capital introduced, there are two accounts involved. What are the accounts involved? Okay. Cash. What is cash? We have already seen in the above example. What is that? It is a real account. Okay. So then comes the capital. What is capital? It is a personal account. It is related to a person. Two accounts has been done. For every debit, for there will be a credit. Here we can see how we have written for capital introduced the entry is cash account debtor to capital account. Okay, cash is debited and capital account is credited. How? Real account. What comes in? What comes in? Personal account. Credit the giver. How it has come? So personal account. Normally, the owner of the business will be introducing some amount as capital into his business. So for owner is a personal account. As we have seen, people, organization, banks all comes in the personal account. Yeah, we are the owner comes in personal account. So in personal account, so what comes in is a debit rule of real account. So cash is debited. What is capital? Capital is the personal account. Personal account credit the giver. It was the credit balance. In personal account, credit the giver comes in the credit side. So we have credited capital account. The amount is 1 lakh, 1 lakh. Okay. Now we are going into the second question, which is cash deposited in bank. So the entry for this is bank account debit to cash account being cash deposited into the bank. Please don't forget to write the narration because it also carries some mark as we are in the basic thing. Okay. So the amount is 20,000 rupees, 20,000 rupees, debit 20 and credit 20. Okay. So now what is the bank account? First rule of golden rules. The personal account. Personal account is about the people, organization, bank, everything. Okay. So bank is the personal account. What is cash? Cash is a real account. I think now we are used to the cash. Cash is always a real account. What we have done here? The cash is deposited in bank. So what rule applies here? Bank account debit the receiver. What has gone out? Credit the cash goes out. Okay. Okay. Next comes to the purchase of goods or anything for cash. The account for this is purchase account debtor to cash account. So what is purchase account? Purchase account is the nominal account. What is cash account? Cash account is the real account. So in purchase, what is the rule of nominal account? Debit all expenses and loss, credit all incomes and gains. Here, purchase account is an expense for you. And real account, what goes out? Because cash has gone out. Okay, understood? Next comes the purchase for credit. So, you will be purchasing goods, but you will not be paying cash because someone has gave you on credit basis. So, the same account, purchase account will be debited nominal account, and instead of cash, Ram has given you the goods on credit. Who is Ram? Personal account. Credit the giver. Okay, now I think you understood. You are going with the flow. After doing 4 sums, you will be understanding perfectly. Okay, now comes the sales on cash basis. So the entry is cash account debtor to sales account. What is cash? Real account. What is sales? It is a nominal account. Why we are saying sales as a nominal account? Because all incomes and gains comes under nominal account. So when you sell a product, you will be receiving money. So money comes in. It is an income for you, income or gain. Okay. So what we have wrote in cash, real account. What is real account? Debit what comes in, credit what goes out. Debit what comes in and credit what goes out. Here, what is cash for you? Cash has come for you. And what you have done in the credit? You have sold the goods. So credit all incomes and gains. Okay. Now when the sale is on credit basis, what you will be doing? You'll keep the sale as the same, and instead of cash, you will be writing the person who have gave you on credit. Okay. Next comes the salary paid. So in this, the account is salary account debtor to cash account, being salary paid. So what is salary? Salary is a expense for you. So it is nominal account. Okay, you will be debiting all the expenses and losses. So it has come in debit side. So what is cash? Cash is always a real account. Here the cash goes out. So it is a credit entry. Next is rent paid. Same as salary paid. Rent is an expense for you. It is a nominal account. So you are debiting it. So the entry of it is rent account debtor to cash account. So cash is real account. Cash goes out. So you are crediting it. Okay. Next comes commission received. So when you receive a commission, it is an income for you. The entry for this is cash account debtor to commission account, being commission received. So you are debiting cash because cash is a real account and you have received the cash. So cash comes in. So in real account comes in debit side. So cash account debtor. So what is a commission account here? Commission account is a nominal account. Nominal account, all the incomes and gains. It comes in credit side. Okay. So we are writing commission received as cash account debtor to commission account. Next comes the purchase of furniture account. So what is purchase of furniture? You are paying cash. So to purchase a furniture, here what comes into you? The entry for this is furniture account debtor to cash account. What comes in? Furniture is a real account because it is an asset. Okay. What comes in? Furniture. So you are debiting furniture. What goes out? Credit. Here what goes out? Cash. Nominal account goes out. Okay. I think you became familiar with the cash entry. Cash is the real account when it comes in, when it goes out. Okay. Now here it comes a different entry which is drawings or withdrawal. What is drawings or withdrawal? You are taking the money from your own account. Like you have introduced capital in the business. Now you are taking some amount of money from out of the capital. So being what is the entry for this? Drawings account debtor to cash account, being cash withdrawn by proprietor who is the owner for personal use. Okay. So here two account as involved. What is drawings account? It is related to owner. So it comes under personal account. Okay. What is cash real account? So cash goes out. So we are writing it as a in a credit side and you are receiving money what comes in, debit what comes in. So the drawings amount you have debited it. Now discount allowed. What is discount allowed? So when you purchase a goods, from whom you purchase, they are the debtors for you. Discount allowed. So the entry for discount allowed is cash account data to discount allowed account. Data to debtor. So discount allowed. What is discount allowed? So when you sell a product or goods, the person to whom you are selling it, they become the debtor for you because they needs to give money to you. Okay. So when the money comes from the debtor to you, debit what comes in, credit the giver. Okay. So normally this will be your account, cash account debtor to debtor account. But you're giving some discount to them. Okay. Discount to the debtor. Okay, like 2% or something. So in that case, the debtor should give this amount, but what actually comes to you is 9,800 rupees, and 200 rupees goes on discount. Okay, discount is a loss for you, so you're debiting it. Understood? Now, discount received. Discount allowed is you are giving a discount, okay, to the debtor. Discount received is the creditor is giving you the discount. So, what is when the creditor comes? When you purchase, so when the creditor comes into account, when you purchase a product, the creditor comes in. Okay. Now, what will be the account? Purchase account, debtor to creditor account. When you are repaying it, it will be the opposite to you. It will come in ulta. So, creditor account to cash account. You will not be writing a purchase account because here you are debiting the receiver, crediting what goes out. So, when the creditor gives you the discount, it is the income for you or gain. So, you are writing in the credit side. We are almost in the last stage of the video. We have covered most of the we are almost in the end of the section. We have covered most of the topics and the entries. So here comes the purchase return. What was the entry for purchase? Purchase account to cash or creditor. So what will be the purchase return account? It is the supplier who is the creditor. Supplier account debtor to purchase return account. Purchase will come here as a purchase return. Here you will be writing the supplier name. What is the sales return? What is the entry for sales? Cash or debtor to sales. What will be the sales return entry? It will go there. So sales return account to customer account, who is the debtor or some name. The name will be given in the question. And final comes the depreciation. What is depreciation? For when you are using any asset or movable property, you will be getting the depreciation, which means the value of the machine or the furniture decreases every year due to obsolescence. Okay, so that is depreciation. Normally, depreciation will be based on a percentage of cost of the product. Okay, now you are having a depreciation on machinery. Here, when you purchase a asset, you will be writing in a debtor because the asset value increases. Now the asset value is decreasing, so you are crediting. Whenever there is an increase, you will debit, and whenever there is a credit, whenever there is a decrease, you will be credit. Okay, this comes to the purchase and sales rule also. When you purchase, the goods comes in, so you are debiting it purchase. When you are when you are selling a product, the goods goes out, so it's going out. That In that case, you are crediting that product. Okay. Now, what is the depreciation? Depreciation is an expense for you. So you will be debiting all the expenses and losses. So you are writing as a depreciation account debtor to machinery account. If it is a furniture, you can write as furniture account. Here comes to an end of the video. I hope you all understood, and I think I tried my level best to deliver you the journal account in a simple and clear cut sums and explanation. So stay tuned, guys, and we will be coming up with part 2 of journal entry where we will be solving the sums. Okay, which will be very useful to you, especially 11th and 12th students. So please, guys, like, share, and subscribe to my channel, and also comment below the topics you needed. So when I get a lot of comments about the next topics you want, we will be coming with the next topics. And also, if it is like you need more explanation to it, we can come with the revision videos on Sundays or Saturdays. So please comment the required topics you want, and see you all in the next video, which is part 2 of journal entries. Stay tuned with Study with Curlies. Bye. What is